are three key trends that one might characterise as being macroeconomic, if you like, or macro in the banking sector. The first is the rise, the change in regulation that's taking place, driven internationally and also within the UK, which is clearly going to have a significant impact on the way that banks conduct business going forward. The second is the whole question around liquidity, capital and profitability of the banking sector. Some of those issues have been around now for 5 or 6 years, and it looks like not all of them have gone away again. So there's a shortage of capital out there in the marketplace right now. There are some issues still around liquidity, and some organisations are very focused around profitability. And then the third key trend that I would identify is that of credit risk. Banks are still very concerned about the quality of the lending that they have on their books and the quality of the opportunity that's coming their way. The biggest trend that we've seen in financial services in the last 12 months is the changing regulatory environment. Government has taken a new view of financial services as a direct consequence of the economic crisis. So what was previously seen as a poster boy industry within the UK and overseas has gone through something of a character change. Regulation has intensified to ensure that we don't get some of the problems that we've had in the past. It's being driven internationally by initiatives such as Basel III, but also here at home where we're having conversations around ring fencing and a tighter regulatory environment all around. And this undoubtedly is going to have a significant impact on the future attractiveness and profitability of the industry. So when we look at some of the trends that are emerging in the UK financial service marketplace, there are three key issues that I believe we should be focusing on and look forward to exploring more in the next 12 months. The first is the emergence of new competition. We've already seen the relaunch of TSB in the UK. Williams & Glyn's is going to be spun out of the Royal Bank of Scotland. There are a range of new competitor banks launching or considering launching new products. And the Bank of England has said that there are 20 applications for banking licences currently within the system. The second key trend that we're going to see is the re-establishment of the customer agenda. Banks moving away from the business models operated during the boom years, which have brought them into disrepute perhaps in the public's eyes. So we're going to see less selling of fee-based products and perhaps more of a move back to traditional banking arrangements. And the third key trend that I'd identify, and we're really just starting to consider this and hear it talked about in the press, is the potential impact of a rise in interest rates. An increase of £0.5% in interest rates adds £60 a month to a £100,000 mortgage, and 9% of the UK mortgage borrowers are believed to be vulnerable to an interest rate increase of that sort of size. If interest rates go by 1%, then 20% of mortgage borrowers are perceived to be vulnerable to the increase. So as economic health returns and interest rates start to rise, then I think we're going to see much more conversation around what the potential impact could be on the average household in Britain. There are three key technological challenges that I believe we're going to see more of in the next 12 months or so. Now, the first is going to be the emergence of mobile banking payments on a widespread scale. We already have Barclays Ping It, but the Payments Council is launching an initiative which will bring mobile payments to the masses by linking several suppliers who cover around 90% of the current account marketplace. So we're going to see people using mobile phones to make small and medium-sized payments on a regular basis from telephone to telephone. The second key trend that I think we're going to see more of is the re-emergence of the customer agenda. Banks putting the individual and the business back at the centre of its operations and viewing them as a long-term opportunity to build a relationship rather than a short-term financial benefit. And then the third key trend that I think we're going to hear more of is the whole security agenda. There have been a couple of high-profile instances in the last 6 months or so where banks have been the target of technologically based security issues. And I think the financial service industry is well aware of the fact that it needs to stay one step ahead of the bad guys when it comes to deploying technological solutions to prevent fraud and crime.